With the new tax rules in Thailand for foreign income being brought into Thailand, I thought I'd make a quick video to explain it might not be as bad as you think. It might just be a filing obligation, minimal tax, and just an administration issue. So we'll talk about it through pension cases now and a typical type of client. So if someone is 65 or older, they're married and the spouse doesn't have an income, and they're bringing in a pension, then they actually have 410,000 Thai baht of allowances and deductions. Also, the first 150,000 is tax exempt. So in reality, if they bring in less than this amount, then they don't have tax to pay, but they still have to file a tax return if they're over the minimum thresholds. The minimum thresholds to file is 220,000 Thai baht per year being brought into Thailand if you're a Thai tax resident. If you're married and you're filing jointly, and 120,000 Thai baht if you're filing jointly as an individual. So if you're over that limit, you still need to file a tax return, even if you don't have tax to pay. But let's talk through a few examples. So if you are married, you're 65 or older, and you're bringing in a pension and you remit in 600,000 Thai baht per year into Thailand, you need to file a tax return. You need a tax ID number. But the actual tax amount that you will need to pay is only 2,000 Thai baht. So it shows you that it might not be as bad as you think. That's not even including any tax credits that you may be entitled to from another jurisdiction if there's a double taxation agreement in place. Now, if you're bringing in a bit more income, so if you're bringing in 800,000 Thai baht per year from pension income overseas, then the amount of tax in Thailand, if you were married and you're filing jointly and you're 65 or older, is 16,500 baht per year. Now, this is before potentially you can offset any tax paid overseas with tax credits if that's available. So it might not be as bad as you think. Now, let's look at a higher amount. So let's assume someone is same person, 65 years old, and they're married and the spouse doesn't have an income and they're bringing in a pension and they're bringing 1,000,000 Thai baht per year, then the tax that they would pay would be 41,000 Thai baht in Thailand for bringing in 1,000,000 baht of pension income if they have those allowances and deductions. So it shows you it might not be as bad as you think. And also, that's before we look at the double taxation agreement to see if you can claim any tax credits for tax paid on that pension in another jurisdiction. So it's important to get in touch. We can help you look at your tax calculator to work out if you do need to file and how much tax you potentially need to pay. We have 3 levels of filing service, from essential, where you don't need to claim tax credits, but you just need to file; assisted, where you can claim double taxation agreement and claim back tax credits; and expert, where we have 90 minutes of consultation and we take care of the full process. Feel free to visit our website, expattaxthailand.com, to find out more information.